As I start today's video, I would like to start by acknowledging two big milestones that were reached in the past couple days. Number one was a video with more than 20,000 views, and the second is exceeding 1,000 subscribers. I think I'm around 1,100 or 1,150, something like that. And I'd really, again, like to thank all of you for taking the time to watch the videos. Comment on the videos whether you agree or disagree with the content. The discourse in the comments from the last video were absolutely awesome. So thank you for that. Now, on my last video, we discussed the 20 XRP new wallet minimum requirement, looking at whether the validators would vote to decrease the 20 XRP as the price of XRP goes up, or if the minimum opening cost would simply just get more expensive to the point that most individual investors simply wouldn't be able to afford the minimum investment required. Now, there's a new trend developing in the cryptocurrency space, or really it's more, people are becoming more aware of it because some of the big institutions are getting into it, and that is the custody account or the custodial account. Typically, a custodial account or custody account rather is for the institutional investor, but it's expanding to both the retail and institutional investor into the digital asset space. So the question now is, will self-custody solutions become a thing of the past, meaning using hardware wallets like the Ledger Nano S, paper wallets, or basically each one of us early adopters taking full personal responsibility for the protection of our own private keys, public keys, and managing our investment overall. Hi, this is Jeff with the HODL Report. Join me on today's video as we explore how the market can open to mass adoption without the fear, without the private keys. If you enjoyed today's video, remember to give a thumbs up, leave some comments, and if you haven't done so already, go ahead and subscribe to the channel. Before I do continue, I would like to give a big thank you to one of my YouTube viewers. His YouTube name is What More to Life, for sharing this new information with me. Now, one of the bigger obstacles to mass adoption in the investment of digital assets, putting aside the regulatory conversation, concerns over short-term stability, long-term viability, considering that it's all still a very relatively speculative market and investment. If we really focus in on the mass adoption, it's individual uncertainty, trepidation, fear of keeping one's own private key with no recourse if it's lost. And obviously, there's only a small fraction of the population that is aware of the full extent of the digital asset space. But those that are, there's many that are aware of Bitcoin, that are aware of digital assets, that aren't getting in mainly because of the concern for their own personal responsibility. Now, we can take this a step further to really look at what happens when someone themselves are lost, if they die, without sharing how to access their private keys and their digital asset investments with their family, their loved ones, and therefore the digital asset investments that they have dies with them, or if they themselves, again, lose their passwords. So it's definitely a big deal, and we've seen lots of news articles already of individuals that have put Bitcoin hard drives in the garbage, people that have died and didn't disclose their passwords, and they had hundreds of thousands, if not millions of dollars worth of Bitcoin, and nobody can gain access to it. Now, if we look at the typical brokerage account, there is recourse if you lose your password access, if the holder of the account dies. The money and investments are relatively easy to gain access to, and I'm not going to get into the legal issues of wills, of living trusts, or other forms of standard protective documents that can hopefully keep you out of probate court in case you die or a relative dies, that you're managing their investment for them. But still, all of that is a heck of a lot easier than suffering the loss of the crypto keys in general, or if the individual dies and takes that knowledge with them. The point is that with financial institutions, there's a way to get to the money invested. The way digital assets are currently stored, it's 100% on you. It's you're responsible for your investment. You're responsible for your money, your passwords, your accounts. Again, it's 100% you. So mass adoption, in my view, and really if we look at this, but mass adoption is 100% waiting for there to be a protective mechanism in place to take care of them. Now, I believe that mass adoption won't happen if the masses have to maintain their own investments in digital assets the way we've all been doing it. There's far too many people that don't even know how to turn on their own PCs, let alone figure out how to protect their private keys, and they're not going to get into utilizing the Ledger Nano S, or it's a scary place for them. And just in my own circle of influence and understanding what it takes to get people to even get on their own brokerage account. I know people where you can easily get on an E-Trade, but they still go to their broker instead of managing their own investments. So, but that's because of their uncertainty of keeping private information online. And to some point, there's some truth to that, but overall, if you do things the right way, you're not going to necessarily be susceptible to losing in the typical investment. When you're getting to the in the digital asset space, obviously, if you lose your Ledger Nano S and you lost your backup to that, obviously you're going to lose everything. If your hard drive crashes and you keep everything on the hard drive, you're gonna lose it. So you need to manage your investments at this point. And again, mass adoption, they're afraid of it. I'm going to keep emphasizing that. So what is the solution? The solution really is in the custody accounts. Now, I'm not advocating for or against the custody accounts. I'm simply stating this as a conclusion based on the facts that are in front of us. The mainstream investor needs support and needs a support network that the financial institutions will provide, and they provide the security to allow the individual to then invest in the cryptocurrency digital asset space. Now, these financial institutions can come in a number of varieties, from the traditional known entities in the financial institution sphere, right? So like Citigroup, JP Morgan, Fidelity, just to name a few. And then there's the development of the crypto groups like Coinbase. Robinhood is getting into crypto, but they can be considered a more traditional, even though they're newer on the scene, more of a tech investment house or app. Then you have Gemini, Uphold, and Polysign, which is the one that I think many of you are going to be excited about when we get into it and we talk about Polysign. So before we do that, let's define custody accounts so we all get on the same page with this. Now, the custody account through Investopedia, this is where I got the definition. Cryptocurrency custody solutions are third-party providers of storage and security service for cryptocurrencies. This really goes beyond, because you have the custody accounts and in the financial institution world. But right now we're talking about digital assets and cryptocurrencies. Their services are mainly aimed at institutional investors, such as hedge funds who hold large amounts of Bitcoin or other cryptocurrencies. And so this is really going beyond just the institution and making available to the retail investor to get into the digital asset investment space. So now if you're an investor in XRP, now this isn't a requirement for what we're talking about, but if you are, I think you're going to be extra interested in what we talk about towards the end. And what I want to say now is, who better to work with and put your financial trust in for custodial type services than those who developed the XRP ledger. So many of you might already know what I'm talking about, but we'll get to that in a moment. So we're going to now look at a couple of the groups that are providing custody type account relationships for investors, for institutional investment, and which can also then be extended to the retail investor. So we're going to look at briefly Fidelity, Gemini, Coinbase, and PolySign. Okay, so if we look here, CNBC, this was just 2 weeks ago, October 15th. Fidelity just made it easier for hedge funds and other pros to invest in cryptocurrencies. This was by Kate Rooney. Let's just look at some of the key bullet points of the article. I think it sums it up pretty nicely and really gets right to the point of what we want to talk about. So Fidelity Investments, which administers more than $7.2 trillion in client assets, announced a new and separate company called Fidelity Digital Asset Services on Monday. We all already heard the news about Fidelity getting into this space. This is a huge deal overall for mainstream adoption, and it's definitely a positive and a good thing for our investments. Now, the firm will handle custody for cryptocurrencies such as Bitcoin, and will execute trades on multiple exchanges for investors such as hedge funds and family offices. Other crypto companies have debuted similar products, but Fidelity is the first Wall Street incumbent to officially provide cryptocurrency solutions such as custody. This is a big deal. So again, Fidelity, we already heard the news about this because it's been a few weeks, but it is the first of the Wall Street incumbent big institutions that are getting into it. It's obviously the first, but it's not going to be the last, and you're going to see all the others following suit in a very short period of time. As stated here, our goal is to make digitally native assets such as Bitcoin more accessible to investors, Fidelity Investment Chairman and CEO Abigail Johnson says. Again, big deal. So now let's go to the next one. The next one is Gemini. Now, Gemini, this article on custody services has been around for about a year. So they've already been in this space for the custody account for a year now. In addition to being a digital asset exchange, Gemini is a custodian that is licensed to custody your digital assets and trust on your behalf. As a New York trust company licensed by the New York State Department of Financial Services, Gemini is a fiduciary under Section 100 of the New York banking law and held to specific capital reserve requirements and banking compliance standards. So this is definitely part of the requirement for them to be a custody holder is to meet the specific statutes by state banking laws. So this is definitely important that they meet all requirements and banking compliance standards. Gemini offers two custody solutions. One is the depository account. The other is the segregated custody account. Depository accounts are default for all Gemini customers. Segregated custody accounts are ideal for the institutional customers like hedge funds, mutual funds, and exchange traded funds, which may be required by law or who may be required by law to store their digital assets with a licensed custodian like Gemini. So in order for these hedge funds, mutual funds, and exchange traded funds, ETFs, to begin trading in the crypto space, they need to work with a custody, a license, a specifically licensed custodian like Gemini, like Fidelity, like Coinbase, like PolySign. And so this is opening up to the mass adoption to the retail investor that might not even need to even think about how do you open up an account to invest in a Bitcoin or one of the many altcoins or an XRP or whatever it might be. It's simplifying the process, allowing people to work with what they're comfortable working with. You're at your job, you have a 401k, your 401k will now have access to a mutual fund that is invested in the digital asset space through one of these custodians. How simplified is that? So you're investing, you don't even realize what it takes to have to invest in that space. For the retail investor, they don't care. For the early adopters, we want to know what's happening in this space. We're the early adopters. We're the ones investing. We're the ones taking the big risk in a speculative market. So the next one is Coinbase custody. Now, again, this is important. Coinbase is definitely making a big transition to expanding their market presence. They're obviously very large in the US market, and they've been expanding their digital asset present significantly. So they're supporting assets like Bitcoin, Bitcoin Cash, Ethereum, Litecoin, and I believe, what is it, ZRX, which is the OX platform digital asset. One of the ERC20 tokens. Now, I believe they just added BAT, which is the Brave token. I don't know if that's in the custody. They haven't updated it here yet, but at least that's an investment on or buyable via the Coinbase Pro, which isn't the Coinbase custody. So under the Coinbase custody, just like, you know, they have the segregated cold storage. They have financial and security controls with third-party security audits by the and so we have dedicated coverage, insurance, which is important. Digital assets stored with Coinbase custody are covered by our insurance policy. All the things that these bigger institutions are going to require before they start buying digital assets, utilizing the custodial services or custodian services of the individual exchange. So then, last and not least, and this is where I believe you XRP Ripple fans are going to be ecstatic. If you haven't heard of PolySign yet, and I was just introduced to this, I had not heard of it up until a couple days ago. This was founded in 2017, so it's definitely been around for a while now. PolySign has luminaries in both the cryptocurrency and financial service space working to solve the biggest problem in crypto today, which is custody. It's been acknowledged, and so now this platform and other platforms like what we just covered are being built. So their stated mission, our mission, to build the global standard for institutional digital asset custody. Now let's get into who's behind this, right? We're paving the way for digital assets to become more mainstream. This is important, and we've got the team to do it. So let's take a look at who this team is. Number one on the list here. So Jack McDonald, CEO and board member. Prior to joining PolySign, Jack McDonald was CEO of Conifer Financial Services for a decade, where he grew AUA from $5 billion to $125 billion. Culminating in a successful exit in 2016. Before Conifer, Jack was the managing director and head of West Coast equities at UBS. I don't know how many people have heard of UBS. It's just tiny little banking institution. Obviously a big name. Then we have president and founder and board member Arthur Brito. Now, who is Arthur Brito? He co-founded Ripple and designed the XRP ledger. Now, as we know, Ripple has grown to over $30 billion in assets in 5 years. Prior to Ripple, Arthur was the CEO of Information Access Technologies, Inc., one of the first ISPs. He's obviously a renowned technical leader in the digital asset space. That's Arthur Brito. Big deal. That's a huge deal. Now, we have Kimin Papahajopoulos. He comes to PolySign as a software expert. Now, what's his background? I don't know. He came from a little company no one ever heard of, Hewlett Packard and HP. And before that, Data Direct Networks and EMC. I don't know if anyone ever heard of these companies, but obviously huge companies. Big deal. He is the CTO. So this makes a significant difference. So PolySign already off to a phenomenal start with some amazing team leaders. Then we have VP of Product, Anna Tong. Anna Tong has worked for a decade at different companies. She was the first product manager at Ripple, where she led all of Ripple's consumer products, such as their exchange product, and worked on the first version of XRapid. She also led product and customer success at HomeLight. What other kind of startups? I don't know if you ever heard of Google, but obviously definitely another one, top leader. Then, who else do we have here? We have David Schwartz. Incidentally, David Schwartz and Arthur Brito are behind this project and product. David Schwartz, CTO at Ripple. Along with Arthur Brito, David was one of the original architects of the Ripple Consensus Network. Prior to joining Ripple, David Schwartz was CTO for Webmaster Incorporated. He developed an encrypted cloud storage and enterprise messaging for organizations like, I don't know, you might not have heard of CNN or the NSA. So obviously we all are familiar with David Schwartz. We know he has a phenomenal background. We know he created an amazing technology, amazing product with XRP, did an amazing job and is doing an amazing job at Ripple. And then we have Tim Keeney. He is the senior advisor and board member, and he is or was the vice chairman of BNY Mellon, another huge banking institution. So this is the team leadership of PolySign. Like I said, if you're going to put your money somewhere, where do you want to put it? We see what they're doing with Ripple, what David Schwartz and Arthur Brito accomplished in building that product and what they're doing. And now we have PolySign coming right up on the heels of that amazing product. Now, I know that the early adopters jumped into Bitcoin and altcoins to get away from traditional banking, from the traditional financial institutions. They figured this is the way out. This is a way to become decentralized and break free of the grasp of the financial institutions and the banks. But the world is ever changing. There will always be those of us, the early adopters, who will continue to manage our own investments. And then you have the mainstream retail investor who will come to rely on, who have come to rely on financial institutions to support and secure their investments. And it will be no different when they want to invest in the digital asset space. And it's not that far away. Everything is being set right now. Fidelity is jumping in. Soon Citigroup is going to be in. All of the big entities are getting in and they want to invest. We have the ETFs that will be in soon. The mutual funds want to invest in this space, but they're waiting for the ground to be set. As soon as it's set, then we're going to see a significant ramp up in mainstream adoption. But until this happens, we're not going to see a rapid expansion of mainstream adoption. Now, with all of this being said, and for those who are Bitcoin maximalists or digital asset maximalists to stay away from the banks, the world is not coming to an end. The financial institutions are large. They're in control of the current financial structure of the world. That's the reality. Banks control the money flow. The governments process and print the money, and the banks control the flow. The financial institutions, people are comfortable working within this network. This is why we have organizations like Uphold popping up, and Coinbase, and Gemini, and they talk about FDIC being insured, being backed, being secure. Now we have the custody, and we have the custodians, because individuals in the mainstream aren't able to manage their own investments. Now, the day may come at some point, many, many years from now, who knows, we don't know what's going to happen, that we won't need these financial institutions. But for the short term, they are coming to control your digital asset investments. By your, I mean the mainstream retail investor, not necessarily the early adopter. Now, if you are an early adopter, you're in an extremely, extremely unique position right now. I think we all know that. You, me, we all have an opportunity that is really to be in the top 1% of this digital asset space as an early investor. Now, no one knows what the future is going to hold. So we have a lot of people that critique this space. They call it a bubble. But on the other side of this, what I want to point out is that although we don't know the future of where the digital asset space is going to go, and we all project it to being in a very positive, at the same time, nobody ever forecasted that Sears, Kmart, Borders, and GE would see their stocks plummet and their companies crumble, right? We have Netflix replaced Blockbuster, right? Nobody saw things like this coming. So when we look at it from the tech perspective, the early adopters, Microsoft, Apple, Amazon, Google, Netflix, Twitter, Facebook, and the many other high-tech companies and the early investors that saw the future when those companies were originally developed and they were in the process of forming and they launched their IPOs. We had the pre-investment investors, right? The pre-mainstream investment before it launched an IPO, before it was available to the retail investor. And we had those investors. But then, like us, you know, we have this opportunity right now, and that's kind of where we are. We're in that space right now with the digital asset that is in that pre-mainstream launch. So this is pre-IPO with the digital asset space. So now when it went IPO and everybody had this opportunity now to get into the Microsoft, get into Apple, Amazon, Google, Netflix, Twitter, Facebook, and they're able to hold and build their holdings over years. Microsoft, if you would have bought back in the early years, you know, what would it be worth today? Now it's over $100. When the high tech crashed, it went down to 26. So you had another buy-in opportunity. Now stocks, similar to the hard forks, stocks split, right? So you get, sometimes there's reverse splits. That's not a good thing. But you have positive signs when you have splits. Now you have, you know, 2 for every 1 that you held. And now you have another opportunity to buy in. So you have to keep buying in and really dollar cost averaging your investments over a long period of time. Now, this is important to note because, again, we're in a speculative market, just like people speculated on Microsoft. When they came and said that everybody in the world is going to have their own home computer, there were many naysayers that said, nobody's ever going to need a home computer. Why in the world would they want that? When we saw Amazon say that they were going to take over the book industry, people said there's no way you can take on organizations like Borders and Barnes & Noble. It's not going to happen. Right? We see what Amazon did. Google, people looked and said, what do people need to look things up on the internet for? What does that even mean? Netflix, they said, why would anybody need a Netflix when we have a Blockbuster? Where is there a Blockbuster? The new generation of millennials now and the younger generation will never even know what a Blockbuster was. It doesn't even exist. They don't even realize that Netflix used to send DVDs in the mail. So they don't even realize that Amazon was only a book company taking on books. So it's amazing what's happened. The mainstream media has imploded in on itself, and we have ways for individuals like us to communicate with other individuals through YouTube, through Twitter, through Facebook, and the many other platforms that are out there. And really, at the end of the day, we all have an amazing opportunity sitting in our laps right now. Now, if you enjoyed today's video, again, please give a thumbs up. Remember to leave some good comments. I appreciated the comments from the last video were absolutely outstanding. There were some great conversations. If you haven't done so already, go ahead and subscribe to the channel. And before we sign off, one note, I'm not a financial advisor. I'm not giving you any type of financial advice here. However, if I am going to give you any advice, then let it be this. Do your own research. Invest only what you can afford. Invest only what you can afford to lose, and don't buy or sell based on the FUD or FOMO that's spread online. And with that, I look forward to seeing you on my next video. And until that time, keep on hodling your crypto.